there, it's Syama Maher, CEO of Scaling Retail, and we're unpacking retail strategies for 2020. Today we're going to be talking about the future of fashion funding. Now, I get phone calls daily from businesses out there that are trying to understand how to raise capital for their businesses, what are the right approaches to take in terms of raising capital to launch or even to scale. Now, what's fascinating, guys, is you may have been seeing on the news over the last 2 years a number of different fashion companies that have been looking to IPO, that have been raising significant venture capital money, and that have also been looking at raising funds from private equity. Now, what we're going to unpack a little bit more in detail today are the different kinds of funding that your business might be able to get into, but more importantly, as you look to the future, what kind of funding is going to be best for you? And guys, how are you going to go about and get it? So let's start with what kinds of funding there are. Now, most of the time, a lot of small businesses that are growing are really growing from inside capital. What I mean by that are friends and family. Maybe you've done some smaller round of angel rounds. And what angel means is basically someone's who out there who knows you, who's giving you money to help you get your business off the ground. It's less complicated than seed funding. And a lot of people who are former entrepreneurs are really excited about investing into smaller businesses. And so angel funding is actually really fun and exciting. Oftentimes, guys, when you're looking at angel funding, you're also looking at how you're building and growing those relationships. Those are the people who are cutting you your first $50,000, $100,000, or $250,000 checks. Now, the next type of funding you might have been hearing about or probably most familiar with are bank loans and going and getting a small business loan in order to get your business off the ground or even to reinvest and to grow your business. Now, I'm a big fan of bank loans if you already have an existing model, if you've already been generating revenue. Even, guys, you don't have to be cash flow positive, but if you are, even better. Using a bank loan to start your business, however, is definitely a no-no. But if you're into year 2, 3, 4, 5, and plus, having a bank loan or working with a line of credit with your bank is definitely going to be something that you're going to want to look into. And guys, you probably already have a credit card with that bank. You have history with them. They're going to probably get you some really great interest rates in terms of what that loan is going to look like. Now, if you're looking at alternative rounds of how you're going to raise capital beyond, let's say, your friends and family, the angels, beyond the business loans, you're also looking at outside investors, either in the form of private equity, or you're also looking at venture capital firms. Now, what's really fascinating about these types of industries, and these are the ones you've been hearing about, these are the ones that have been making their rounds onto CNN, you've been reading about them in the New York Times. These types of businesses are looking to invest into fashion company and lifestyle brands that are really going to be focused on tremendous amounts of scale and growth in a short period of time. Let's go back. When you think about friends and family and those angels, these guys are not going to have time pressure on you in terms of when you need to turn a profit. Chances are, guys, they might even be giving you money knowing that your business may or may not succeed. When you're going with a bank loan, again, you're going to be held to some interest terms and you're going to have a fixed length, or maybe your line of credit is revolving, but there is no plan or expectation that you're going to have to hit a very aggressive number. In fact, banks tend to be very risk averse. However, when you start to look at venture cap and you start to go into this other world of investment banking, what you actually start to see are these kinds of groups that are looking to invest into high growth potential businesses. That means that they are looking to see not only are you doing 10 million or how close are you to getting to your first 10, but how do you make it to 30 and later to $50 million in a short time period. Now, the interesting thing about looking at these outside investment banking and VC companies are that they're not always looking at profitability. They're looking at scale and they're looking at growth. Your bank, on the other hand, is looking at cash flow and they're looking at profitability. And again, your friends and family and your angels are saying, hey, we love you. Here's the money. We wish you well. But if you're starting to think about a little bit deeper into the future growth and plans of your business, you'll find that there's actually room for all three of these different models within the lifespan of one company. Let's say you've had some angel investment to get your business off the ground. You're now into year 2 or year 3. You might be saying, this is now the time I need to be establishing credit. You might be opening up a line of credit with a bank in order to fund your receipts or to fund your invoices for production. But you need to be able to have a cohesive plan of how you're going to repay that loan or to be able to repay that line of credit. Then later down the road of your business, maybe you're starting to hit that $10 million marker and you're saying, okay, Now we have a plan for growth. Now we have that trajectory. So what exactly are these VCs looking for, guys? If you're at that point in time right now where you're saying, I need some outside capital, I'm going to give you a rundown of exactly how you want to be positioning your business in order to succeed. Number one, these companies are looking at who the founding team members are. What is your track record and what is your history of having this business, right? The next thing they're looking for are really technologies and operations, right? How and what elements of your business are able to scale, right? The third thing they're looking for is truly what is that distribution marking point? Do you have some proprietary technology? Have you established brand partnerships? Where exactly are you going to be pulling the lever in order to hit that $50 million marker? Of course, when it comes to getting big rounds of investments and you're looking at companies like Forerunner Ventures or Fifth Wall, or maybe you're even looking at Imaginary, these are all different kinds of investment groups that are looking to make strategic plays into consumer packaged goods and into lifestyle brands. However, guys, there are some risks that are involved with these high levels of investment. It might sound nice at first to do your first $1 million or $2 million raise, or maybe even you're looking at a $10 million raise, but what exactly are you giving away in that process? Now, let's go back to the beginning. When you think about friends and family, you're obviously going to retain 100% ownership of your business. When you're thinking about even the bank loans, you retain 100% ownership of your business. All of a sudden, when you start to look at these other investment groups, now the equity in your business is going to start to decrease. Now, most of the time when it comes to looking at whether or not that's a right play for you, it's going to be a matter of saying, where do I want this business to even go? I'm not going to sit here today and say there's a one-size-fits-all approach and that all of you should be engaging in all three of these rounds of funding or financing even. However, if you do have your eyes set and you have a 5-10-year plan and an exit strategy in mind, then you're probably in a right place of saying, hey, how big do I want this to get? And where am I going to look for the resources in order to help scale it? There is nothing wrong with being a small business. There is nothing wrong with having a healthy $10, $20 million business that you manage with a team of 10 to 15 people. However, knowing where you want to finish when you've started is very important. I've seen over and over again businesses get screwed over by having strategic investments by outside partners who are not leveraging smart money. They're giving their resources, their expectations are high, all of a sudden they have a seat at the board, but the value that they're driving your business with is very little. Meaning a lot of money, a lot of voice, but not a lot of experience in your specific realm of business or your specific product category. What you should be looking for, guys, when it comes to raising capital is where is the smart money coming from? If the money's going to come with no strings attached, then amazing. Charge forth and use it as you wish. If the money's coming forward and you have strings attached, you have to ask yourself, where is the intelligence behind these resources? What are the kinds of operational strategies and how are these outside investors actually going to add value to my company aside from just giving me money? Again, smart money is what you're looking for. So as you start to build this path to success and as you start to build your 5-10-year plan as well as your exit strategy, we want to take a look and deep dive into your organizational team. Who are you hiring? What is the hiring plan? Who are the key individuals that you're going to tap into when you do raise X amount of capital that are going to add a tremendous amount of value? What are the proprietary technologies that you're building? And what is your special sauce that only you can bring to the table? I have to say, companies are really biased to business owners who've been around for a few years, business owners that have their second or third companies, and also teams that are able to add a tremendous amount of value. At the end of the day, these investors are investing in you and your capacity and capabilities rather than just an idea. You might have the smartest idea. You might have test marketed your product. You might have had some tremendous amount of traction, but it's not about the idea, guys. It's about you. So having a deep dive and understanding of your own mindset, whether or not you'll be the right CEO founder from the start to the finish, or whether or not you have plans of expanding your team and understanding where you want to fit is a very important exercise and something that all business owners need to do in order to find success and growth. Don't get blindsided and don't get fooled by what you see in the news these days. Yes, companies like Rent the Runway are seeing a tremendous amount of investment. You're seeing The RealReal get a tremendous amount of investment, Stadium Goods, and the list goes on and on. There are no shortage of these brands that are raising capital. But you have to ask yourself, guys, when is it the right time for me to raise capital? Where should I be looking to raise those resources from? And how do I know when it's time for me to reshift my organizational capacity and structure in order to allow for that growth to happen? Fortunately, guys, here at Scaling Retail, we work with a lot of different brands exactly in that position, whether it's from looking at your pitch decks to positioning, capacity building, and even aligning where you might need strategic funding based on your hiring and your 5, 10-year, and even exit strategy plans. We are here to support you and help you to make the right decisions. I get it. It's hard to be a creator and a chooser. It's hard to know exactly where to reinvest your time and your energy and your resources. So let professionals step by your side and help you guide your path so, guys, you can start the way you want to finish. All right, please send us an email at hello@scalingretail.com. Would love to hear from you. And leave us comments below. Would be very interested to hear about your future funding plans as you start moving into 2020 and beyond. Thanks, guys. Bye.